good weekend, all. Ira Epstein with your metal market wrap-up, and this is your weekly edition, so we'll be looking at weekly charts, and it is today, Friday, the 2nd of June, 2023. Happy birthday to my son. Happy birthday to him. Okay, so in looking at the markets, let's understand what a day it was. It was the big jobs report day. I'm not going to go in great detail to it. I'm going to show it. That I covered in the financial update, so you can go in and hear all my thoughts there. It's also where the president took a victory lap at 6 o'clock on Friday night, Chicago time, telling the world that the U.S. and his administration, they averted the default. Let me tell you, there was never going to be a default. I thought I had said that every time that this came up. There was, at first, I thought, possibility of an extension, but I do give Congress a lot of credit. They got a deal done instead of an extension. I applaud them on it. All deals are never one-sided. You know that. There's give and take. We will hear in the coming week the call for the head of Speaker McCarthy that he didn't do enough, that he gave away too much from his own party, and he might lose his speakership. You know, to get it, he had to play with the devil. And anybody can call for it, for his removal. The question is, can they get the momentum to do it? At the end of the day, he got a deal done, and he should be applauded as well. So when we go to today's report, and I'm going to come there right now. There we go. The non-farm. The headline number was 339, a blowout, almost double, 80% more than the market was looking for. But what the market focused on was the unexpected jump in unemployment. We had positive numbers coming out for April, if you call more jobs positive. But what the market focused on was the details of the household survey. Now, every time we get one of these reports, it's the business survey, which is the non-farms number, the combination there, that everybody focuses on. But naysayers will always find something to pick at. So what they'll pick at is the unemployment rate went up. And when you go to the household, you find that there was an increase in previously employed persons who found themselves unemployed. Hear that word? Unemployed. Well, the business survey pictured a picture of strength, but we're going to focus on the unemployed. Then wages of people who weren't in management got no play at all. It rose 0.5%. Doesn't matter. That's not what we're going to focus on. We're going to focus on the 3.7% unemployment. Okay. So let's assume you go to 4%. If you keep adding jobs like this and inflation doesn't come down, then the Fed has to keep going up. I don't understand the logic of people still saying the Fed's going to have to break interest rates. In other words, take them down. Where is the weakness coming in the market? If you want to tell me the weakness is in, and let me get over here to the right chart. There we go. In the stock market, you had a melt up today. Not a meltdown, a melt up. You soared to the upside. But underneath everything, the dollar got very strong. Interest rates went up. Remember, when you go down in the futures, they're going up. And those headwinds hurt the gold market, down $25 today, the silver market, the platinum market. Copper is up because China, which consumes 50% of the world's copper, is trying to perform a miracle in its property market, which is sick beyond imagination. They're trying to get something going, people buying. They're trying to build more. They have buildings that aren't filled. So they've got their hands full, and the biggest problem China has isn't necessarily the property. It's getting their population to spend. COVID changed the spending habits of the general population. They're holding on to their money. They got to find a way to free it. Energy markets coming back to the upside. Remember, this is the week where you get the OPEC meeting on Sunday. So we'll start hearing tomorrow as the ministers go in and talking what's going on. Will there be a production cut or not? It's a close call. We heard from the Saudi minister 3 weeks ago or so, if you're short, we're going to hurt you. And it's the same, which means a production cut. Flip-flop, the Russians saying there's no need for any more cuts. Which way is it going to go? All right, sorry about that. Let me come back to where we were. So, keep hitting the wrong button right now. I'm so excited. It was a crazy day. Okay. In the gold on a monthly close, you were down 0.5% for the month. Okay. Tell me that when I drew this line, and by the way, I drew this line, had to be 8 weeks ago, 10 weeks ago. I said, I have a feeling that this old peak, which isn't 209.80, it's been the 20, I think it's the 2010 level, something like that, on a closing only basis, not for the high of the move, a close. I thought it could be a resistance point. I didn't think I was going to be as right as it turned out, but I've been very right. And I thought if you broke hard, you might go back to the 18-week average of closes and try to pick up from there and restructure the market. I am not a bear on gold. I don't see inflation having been beaten down. What I do see is with the dollar this strong, with interest rates possibly going to add more to them, what do? Obviously, the answers to a lot of this is going to come about on June 14th. Even if the Fed goes up 25 basis points, you will hear the same arguments for the meeting after that where the Fed should stop. The Fed will stop, I pray, when they said what they do. They should be data dependent if that's what they're going to follow. Some people don't like that. They think that that hardcore position can tip America over into a serious recession. I say you can't have a serious recession when we keep adding this amount of jobs. You'll say the household survey says something different. I get the arguments. When we take a look right here, you can see how the market's been backing off, but you're not in a trend. You have a higher high and a lower low. This week didn't break that pattern. This pattern was broken right here 2 weeks ago prior to this one. Where did the market fall to and where do I think support's going to come in? Ta-da! The 18-day average of closes. Where was the resistance? You don't think the upper Bollinger Band did its job? Huh. It did it in a major way, and you were overbought, and you're correcting that. Now, that's positive down the road. As this market gets away from being overbought, and neither number is over 70 anymore, now we can afford for the market. And it'll take a while to build a base to work from. I say a base, not a collapse, because I do believe inflation is not beaten. And I think that if we get to the point where the dollar starts coming down, interest rates, for whatever reason, with whatever the Fed does, don't spike again, I think gold comes back into play. When I look at the gold-silver ratio, silver starting to gain on gold. All you did on a weekly basis is go back to the resistance of the 18-week moving average of closes. That was my goal that the market did. If you watch the weekly charts, they're all up there on YouTube. Go and see what I said. Now, where's silver? Interesting, just like gold, fell back to the neutral zone on the chart, no longer overbought. It's got to build from here. It's not ready. It's fallen into the support of the 100-week, the 18-week, and even under that's the 200-week average. So unless the economy tailspins, this is a zone. You're entering what I call the value zone. That's what I think you're at. Copper, how often do you stay under a Bollinger Band? 5% of the time. You hear me over and over and over here say, the first challenge of a major moving average, a 200-week moving average of closes. You hadn't been back here since November. That's where I think the pros cover shorts, the combination of the Bollinger Band. I didn't say go long. I think they cover their short positions, and that's what I think took place. In the platinum market, down to the 18-week average of closes. And in the dollar index, lower low, higher high, momentum up, bias up. Can it reach up to 105.40 is going to be the big question. Don't know the answer to that, but that is the question mark that we should all have. Now, have you ever seen our free offer page? Because I talk about it so much. I've made it here so you can see it, and there's more offers under this. How it works is you go onto the free offer page, and you can click whatever you want. Form will come up afterwards. We need your name and address. Boom. We'll get everything out to you by email, 1, 2, 3. And there's a whole host of things for you to choose from. So how do you get to the page? Well, you can move your cursor to the top here, or you can go to iraepstein.com. Got it? IraEpstein.com. Can't be any easier than that, and away you go. If you like these videos, do me a favor. I put a lot of effort in them. Please give us a thumb up. If you want to subscribe to any of my videos in the morning, you see on the bottom of this page, by the way, the blue area there, give it a click. That's the form. You do it right online here. We'll have you up and running in no time. I'm Ira Epstein. You have yourself a great weekend. Listen to the president. Let's see what happens here. Let's see how the NBA games go. It's exciting. By the way, in Chicago, we have Taylor Swift. I can only tell you the city's turned upside down for her. You have a great weekend, all.